This is Bruce Wall from the City of Scottsdale's Neighborhood College Program. We're all in this together.
The City of Peoria. We're in this together.
The City of Chandler. We're in this together.
Hi, this is Jamie from the City of Scottsdale with my daughter Jocelyn. We're in this together.
City of Tempe. We are in this together. Good morning and welcome to class number 9 of our 2021 Virtual HOA Academy. I'd like to thank the cities of Avondale, Chandler, Glendale, Goodyear, Mesa, Peoria, Phoenix, Scottsdale, and Surprise, and Tempe for partnering with our firm, Mulcahy Law Firm, to provide free education to board members, owners, managers, or anyone who has an interest in how the legal operations of an association should be running. My name is Beth Mulcahy, and I'm the managing partner of the Mulcahy Law Firm in Phoenix, Arizona. I've been working with associations in Arizona, HOAs, condos, planned communities for almost 25 years. November 1st will be my 25th anniversary of the opening of our firm. And I've really enjoyed representing HOAs and condos during that time period. I've also served as a board member for my community. And I really love our industry. I want you to know that's why we teach these classes, to make sure that board members, owners, and managers are informed of their rights and their responsibilities and things that they can do to make their communities better. And I know that all these different cities that are partnering with our firm feel the same way, and they want you to have resources at your fingertips so that you can run associations that are in compliance with the law and that have very few problems. To date, I'm proud to announce that our firm has hosted 38 virtual seminars since the pandemic started in March of 2020. That number is actually surprising to me. I knew we did a lot, but 38 virtual seminars, and we've really enjoyed transitioning to doing the seminars virtually. Miss seeing all of you in person, but glad you could be here today. Also, since March 2020, our virtual classes have a combined 47,000 views. Wow, that's amazing. I never thought that our YouTube channel would have that many views and our Facebook videos would have that many views collectively. So thanks again for joining us and being a part of this great education program. Just a quick reminder, our firm's website is mulcahylawfirm.com. And our firm's LinkedIn page can be found at Mulcahy Law Firm PC. We have a wealth of great information on both of those resources, cheat sheets, videos of every class that we've taught on basically any topic. So if you want to learn more about HOAs and condos, that would be a great resource for you. Here's what we're going to be discussing today. In today's session, we're going to do a deep dive on everything you need to know about associations' finances, from how to create a budget to how to read financials for your association, to financial responsibilities of board members, reserve studies and the importance of having a reserve account, and then lastly, how to prevent fraud and embezzlement. I'm also going to give you a quick overview of the new HOA and condo laws in Arizona that have been signed by Governor Ducey and are going to go into effect September 29th. But first things first, I always like to know a little bit about who's in my audience today, because I can't see you in the front row. So I want to do a little poll to have some interaction with you. The first question that I would like to ask is, in which city do you reside? The second question is, let us know your current role as a board member. Are you a board member, a manager? Are you an interested homeowner? Just let us know who's in the audience today so that I can best tailor our presentation to make sure that I'm meeting everything that you'd like to hear. Okay, so we should be getting those poll results back soon here. It looks like we have a great turnout today. We have about 2% from Avondale and Goodyear, 6% from Chandler, 2% from Glendale, 15% from Mesa, 2% from Peoria, 21% from Phoenix, 33% from Scottsdale, 2% from Tempe, and then 17% had other. And unfortunately, we don't have anybody from Surprise here today. Let us know your current role. The answers were 75% of you are board members, 2% are community managers, 19% are homeowners, and 4% are others. So welcome, everybody. Glad to know that we've got a really great demographic here today. We have all over the Valley, and we have board members, managers, and homeowners. So welcome. Thanks for being here. Let's start out first with our 2021 legislative update. As you probably know, we've been following the legislature in our office since January 1st, 2021. It was a very unusual legislative session. It was long. It didn't close until June 30th, which I've been doing this 25 years. That's a long session. The legislature was really focused on COVID issues and had difficulty passing the budget, even though they have a lot of money right now in our state due to the COVID relief. It was kind of a slower year for HOAs and condos. There were only 4 bills that were passed this year and signed into law by the governor. And there really aren't any significant changes, but I just want to do some mentions of some of the things that are going to be going into effect here in a couple of weeks on September 29th. So the first one deals with attorney's fees on garnishments. Previously, attorney's fees were not awarded when the association had to file a garnishment to collect on a judgment. But that law is changing now, effective September 29th, 2021. So when the association gets a judgment against an owner and we have to pursue a garnishment of the owner's wages, bank account, or rent, we now can ask the court to award attorney's fees, which is a very positive development for our industry. The second bill deals with political signs in condominiums and planned communities. And basically, it just allows signs to be up for political signs to be left for up to 15 days after the general election. Or if the sign is for primary, 15 days after the primary. And so we won't see this new law come into effect until the November 2021 elections. But just remember that the time period that an owner or a resident can keep the political signs up has been extended from 3 days to 15 days after a general election or primary. The next one is mask mandates, the business exception to this. Interestingly, I was reading in the Arizona Republic this morning that today a Superior Court judge in Maricopa County is going to be making a decision on this as to whether or not this mask mandate law is going to be enforceable. So stay tuned. We'll be talking about it, I'm sure, on our next, probably our next thing that we're doing is our first Friday, which will be the first Friday in August. And we'll put something out, of course, on our social media. But here's what the law says. Regardless of any other law, a business in the state of Arizona is not required to enforce on its premises a mask mandate that is established by the state, a city, town, or county, or any other jurisdiction of the state. So I think how we're seeing this come into play right now is with the children being back at school. I know, thank goodness, my kids are back in school. I'm so happy about that. Back in school in person. But a lot of the school districts are requiring students to wear masks at school. And so this law kind of directly, goes in the face of this law, I guess. Although schools, in my opinion, are not a private business. But we'll just have to wait and see what the Superior Court judge does. There probably will be an appeal. Kind of know how things work in the legal industry. But how this applies to associations is that we are considered a nonprofit corporation. All of you, I'm sure, are set up as nonprofit corporations. And so you are not required to enforce a mask mandate that is established by the state of Arizona, city, town, or county, or any other jurisdiction of the state. Obviously, this doesn't address any federal mandates, which probably would trump this law. And I'm not really seeing any questions on this with the masks in the association anymore. Most associations are requiring masks indoors, but some aren't. So it's really a case-by-case basis. And then last but not least is the Civil Liability Public Health Pandemic Bill, and it makes it very difficult or nearly impossible, frankly, in my opinion, for a plaintiff to prevail regarding a pandemic-related lawsuit, so long as the HOA or condo was acting in good faith in the decisions that they were making during the pandemic. We have a great summary of the pending Arizona legislation. We just put it out just recently, the final version of the 2021 summary of pending Arizona legislation. We're going to be sharing that in the group chat and on Facebook Live. You also can find a copy of this on our firm's website at mulcahylawfirm.com. Just go to our cheat sheets page. And again, just in closing, all these bills are going into effect on September 29th, 2021. Okay, let's switch gears and talk about budgeting. All of you should be thinking about budgets this time of the year for our 2022 budget. And I'm going to start out with just a quick poll because I'm interested to find out, for those of you who are on this call, has your board started working on a first draft of your HOA or condo budget? So it's either yes, no, or I don't know. That'll give me an idea as to how on track your associations are and where you are in the budgeting process as we navigate through how to create a 2022 budget. So the results are in. Yay, I'm so happy to see this. 59% of you are already starting to work on a first draft of your 2022 budget. Good job. 27% aren't quite there yet, so you haven't started working on it. And last but not least, 14% aren't sure. So great response. Thank you so much for participating. It really helps me as I tailor these classes. So let's talk budgets. First, just some introductory remarks. COVID really has kind of thrown a wrench in all of our budgets, right? We've had some unexpected budget line items due to COVID that may have skewed our numbers in 2020 and 2021 and may possibly have caused your association to be over budget. I'm hopeful that in 2022, there won't be very many COVID-related expenses for sanitization, extra personnel that you might need on your property in your budget. But you might want to have some buffer zones for that because I think, as we all know, with the Delta variant and other variants, coming around in the United States right now, it doesn't look like COVID's in our rearview mirror yet, although we all really wish it would be. Okay, let's start out with the basics. What is a budget? A budget is an itemized summary based upon anticipated income, which would be the money we get from the homeowners when they pay their assessments or special assessments, and expenses, which are all the bills that we pay to run our association for each fiscal year. Most association documents just require that the board adopt a budget each fiscal year. And most associations' fiscal year is the calendar year, which means that we should have the budget adopted by December 31st. Our goal, frankly, is to start working on the budget in late summer or early fall each year, and then try to approve the budget for 2022 sometime in October, November, or December 2021. And why do we do it that early? Because you may have to provide notice to your members of any assessment increases, or send out coupon books to them, or just notify them of any increases that you may be having. Typically, who prepares the budget? It really just depends. For some self-managed associations, it's going to be like the treasurer and the president are the key people that prepare the budget, maybe a special committee. In most associations that have a management company, the management company does the first draft of the budget and then gives it to the treasurer or the board to start working the numbers, so to speak, to see what we're going to be prioritizing and expenses, anticipated expenses for the year. Just a friendly reminder, each association should check your association's documents. Typically, it's going to be in your CC&Rs or your bylaws to determine the requirements, if there are any, for preparing the annual budget, and whether the members are required to participate in the budgeting procedure, meaning do they have to approve it? Or maybe do we have to get a vote of the membership to increase our assessment rate, pursuant to your documents? So one of the first things you should be doing is looking at your association's documents to determine, hey, do we need to get a membership approval of the budget? For most planned communities, no. For some condominiums, yes, you may need to do that, and there's a process to do that. Then second, if you are going to have an increase in your assessment rate, look at your CC&Rs to see if that increase requires a vote of the membership. And you may want to be reaching out to your legal counsel to help you with any interpretation of that or any planning for a special assessment or for a regular assessment increase. Okay, what are the steps to complete the budgeting process? And just so you know, we have an awesome cheat sheet on this topic for you, and my firm is going to be sharing that here in the group chat. If you want to obtain a copy of it from our website, you also can go to mulcahylawfirm.com, click on our cheat sheets tab, and just type in budget in the search engine. So here are the steps. Step 1, review last year's budget. So look at the 2020 budget, look at the year to date on 2021, and compare the differences between what did you budget and what was actually spent. Are there any variances? Are you higher, lower? And think about, is that going to carry through in 2022? So this is kind of the fun, kind of wonky part of doing the budget, right? You can look at what you spent in 2020, 2021 to date, and think like, hey, is this a variance that is going to continue through to 2022? And start analyzing the numbers a little bit. Next, think about what are the needs of the community for your association, your HOA or condo in the next year in 2022. Does the annual assessment need to be raised because of an increase in delinquencies and increased costs of operating the association? Is it anticipated that the board will need to make a new expenditure that's going to benefit the community? Are you going to put in pickleball courts? Do you need to resurface the tennis courts? Are the roads in dire need of being, resurfaced or, placing new asphalt in there? Do the estimated expenses exceed an estimated revenue? And so kind of just start plugging the numbers in. And many management companies are doing this on a special budgeting software package. If you're a self-managed association and you want a sample budget, please email me directly at bmulcahy@mulcahylawfirm.com, and I can give you an Excel spreadsheet that you can use that already has the computations and already placed into the Excel spreadsheet, so that you can just plug the numbers in and it adds everything up for you, and it's really helpful. So for those of you who are self-managed and maybe need a little help with something like that, just email me and I'm happy to share that with you at no charge. So after you evaluate the needs of the community for the upcoming year, then think about what are the needs for the community for the future? What long-term capital projects need to be addressed maybe in your reserve account budget? When was the last reserve study conducted? Are you considering increases in the operating expenses? Should a new reserve study be conducted? There's a cost to do that. Typically, reserve studies, cost somewhere between $850 and $5,000, depending on how large your association is and how many amenities you have. Does a larger percentage of the annual assessment need to be, shifted to the reserve budget? Like, should you be putting aside more money out of your annual assessment income to fund the reserve? And all of these are strategy questions. You need to be forward thinking about the future of your association. And if you need any help with this budgeting process, know that I am definitely a resource. I have done thousands of budgets with associations over the years, and I think I could provide some valuable input if any of you need help on that. Next thing, think about the association's contracts. Typically, associations have landscaping contract, pool contract, maybe a cleaning company, maintenance company, your lawyer, your CPA, your management contract. All of these contracts could potentially be increasing in price. And so reach out to your vendors, find out, are there going to be any anticipated increases this year, and then factor that into your budget. After you get the information from the vendors, determine the exact amount that you're going to need to be included in the budget. And then plan for unexpected and miscellaneous expenses. Wow, that was one. I had this in this cheat sheet that I did before 2020, but wow, in 2020, that really was a game changer. And we realized how important having a line item for unexpected and miscellaneous expenses can be. And one thing I've learned in 25 years is that expect the unexpected for sure. And for associations, that might mean a pool pump going out, or having some sort of a storm damage or a flooding of a unit in a condo where the association may have liability and have to pay for the internal repairs inside a unit. In COVID, we had increased sanitization expenses. We had to get personal protective equipment for many of our employees. We had additional security charges. And so, all of these things while we can't plan for them, you can plan to have a line item in your budget for miscellaneous things and unexpected things, and what percentage of your budget you want to, put in that category. A good place to look at is look at your overages, look at the variances in your budgets from 2019, 20, 21 to year to date. And, maybe look at what the percentage was of overages, or where maybe you had to cut expenses so that you could meet expenses, and that might be your number. Maybe it's a 5% contingency in your total income, maybe it's a 10%. I don't know. It really is just going to depend. Delinquencies. Just a couple things to think about for delinquencies would be, the pandemic obviously has been kind of a strange time, right? And we haven't seen a large increase in delinquencies, frankly, in associations. We don't know when the shoe's going to drop, and maybe people stop paying assessments. But right now people are paying, and that could be because of all of the federal and state money that's flowing through to residents in the state of Arizona. And at some point, all of that is going to dry up. In fact, starting this past Monday, September 6th, or last week, Monday, September 6th, an estimated 82,000 Arizonans are going to be getting $240 a week less because all of Arizona unemployment benefits ended on September 6th. So Arizona's unemployment rate is already higher than the national average, according to the Arizona Republic, and we're at 6.6%, and the national average is 5.2%. So how is that going to potentially affect our delinquencies? I wish I could, tell you the answer on that, but what I can tell you is it's a fact that we need to take in consideration for 2022. We anticipate as a firm that there will be an increase in the number of delinquencies, probably by 5 to 10% in your communities, because a lot of the federal and state funding is ending, unemployment benefits are ending. I think we're seeing that almost 120,000 tenants across the state are behind on their rent payments, according to the latest Household Pulse survey. And 36,000 Arizona renters think that they're going to be evicted. And the Arizona Republic has been running articles in the paper for the past few days about the high number of evictions that are being filed right now in Maricopa County. So expect that the number of delinquencies are going to increase in your association in 2022. And that's going to decrease the amount of income that you have coming in. So you may need to counter that by increasing the assessment for those that, everybody across the board because of those expected delinquencies. Budget the amount. The next step would be budget the amount to be placed in each line item after conducting and concluding the research. And then analyze the estimated expenses. If you look at the numbers and the expenses are exceeding the estimated revenue on your budget after plugging in all these numbers, then the board needs to either reduce expenses on the budget or increase assessments or impose a special assessment to cover any large items that might fall under like a large capital improvement project. So that's where you kind of have to do what I call like the budget dance. You're going to have to either, not do some things in 2022 to keep yourself within budget, or you're going to have to increase the assessment rate. And again, don't forget, check your documents to make sure that you are increasing it consistent with the documents. You may need a vote of the membership if you increase it above a certain percentage. The budget then should be reviewed and approved by the board of directors. Typically what happens is the 9 steps that I just went through with you on this Zoom call. Typically that's going to be done by a smaller team on your board, and then you're going to bring it to the board for their review, comments, and potentially their approval. And so at this point, then you bring the budget with the final numbers that you're recommending to the board, and the board approves it. They ask questions. If they have any questions, maybe there's some tweaking that's done to the budget. And then ultimately the board of directors is the final entity to approve the final budget. And that typically, like I said, happens in October, November, or December of 2021. In some cases, if you're in a condo, Maybe the owners have to approve the budget too. It depends on the language in your CC&Rs. When you're talking about this at your board meeting, and obviously homeowners are present, you want to make sure that you're providing backup information. So whoever prepared the budget should explain why there's a variance between 2021 and 2022 in the budget. Try to keep it simple and to the point, and just discuss the most important items. Those are the items in which the membership is most interested. And frankly, from my experience, they're most interested in, are we going to have an increase in our assessments or not? And if you are, be ready to tell them exactly why. Give them a good explanation why. And be open and ready to answer questions, because people get fired up about when there's going to be an increase, and we just want to be able to provide a good business-like answer to them as to why this is needed. Remember too, sometimes associations come to me and they say, we've done such a great job. We haven't increased our assessment rate in over 10 years. And when they say that to me, they're usually coming to me with a problem because they don't have enough money to pay for deferred maintenance. That shows to me that you aren't really keeping up with the world, the rest of the world, because every aspect of the economy, the prices are going up, right? And your association is operating with less dollars than your expenses, right? If your expenses are going up and you're not increasing your assessments at a similar rate, you're starting to operate with less money. And that usually results in deferred maintenance and shortfalls, lack of funding of your reserve account, all of which are negative things for your association. So remember, having an increase every year is normal and healthy for your association. If you're just doing a cost of living increase or a small increase, that's really what you should be thinking about, because I'm guessing that your expenses are increasing each year too. Okay, let's switch gears and talk a little bit about financials and financial responsibilities of an association. So we finished the budget discussion. Now we're transitioning over to how do we read financials? What do we need to know about financials to keep our association safe? And so I want to hear feedback from you. But before I do that, I want to just mention we have 100 people on Zoom with us right now. And I'm not sure how many people on Facebook Live, I think over 20. So great to see all of you here today. Thanks for being here. Okay, so we got a poll question. I'd like to hear feedback from the over 100 people that are here today. If you are a board member, question for you, are you closely examining the financials, such as the bank statements, year-to-date budget, financial statement of your association each month? And by closely examining, I mean, are you actually reading it? Do you actually, you don't have to spend a ton of time, but are you spending some time closely examining the financials? Yes, no, or I don't know. So this question's only for the board members. Sorry, not trying to leave anybody out, but it's important for me to know the answer to this question. Okay. We're going to have our results here in a minute. Okay, awesome. I'm very happy to see these results. So 78% of you are saying, yes, I am closely looking at the financials each month. 17% of you are saying, no, I'm not. And we're going to give you some tips on what you can do today. And 5% are saying, I don't know. Okay, so let's dig right into what are the financial responsibilities you have if you're serving on your board as the treasurer, or maybe you're just a board member at large, or you're an officer, president, secretary, vice president. Remember that the association is overseeing what may be one of the largest assets association members have, their homes. And that is why their association members really want their business, this association, to be run like a business. And they want board members to conduct themselves in a professional and business-like manner. So as we stated already, board members are responsible for creating a budget and, also adhering to that budget, trying to, meet the expenses with the revenue that's coming in. You should also be considering having a reserve study for your association and adequate funds to fund the reserve if the board chooses. Having financial records audited or reviewed, or a compilation done every year by a CPA, a bookkeeper, or a special committee of your association pursuant to Arizona law. If you're an association that has in your bylaws that you have to have the audit done annually by a CPA, you are required under Arizona Revised Statutes 33-1810 for planned communities and 33-1243 for condos to have that audit done by CPA. If your bylaws don't have that requirement in it, you should have an independent person doing that audit every year. And you'll have to determine who that person will be. Obviously, you shouldn't have the management company doing the audit because the audit is checking up to make sure that the management company is doing everything correctly. Same thing with the treasurer. They shouldn't be the one doing the audit. We should have an independent person double checking to make sure that the treasurer is handling things appropriately. Another responsibility of board members is to have the required insurances in place. So in the event that there is an accident or damage done to property, or there's a lawsuit against the board, that the association has proper insurance coverages to protect the association from, any sort of damages or judgments that may be entered against the association. You also have to pay taxes. Federal and state taxes must be filed every year for all associations. If you're a planned community, you also have to pay property taxes on your common areas. If any of you are hearing that you have to pay taxes for the first time, please definitely reach out to your CPA or our law firm, and we can help you navigate how to handle filing your state and federal taxes going forward. Specifically, the treasurer is responsible for assuring that the budget is prepared and reviewed. And with a managed association, as I said, sometimes the duty of drafting the budget is delegated to the management company. But again, the board approves the final budget typically at the end of the process. So what are some tips for, being financially responsible as a board member in your association? So number one, the board packet, which is the information, should be sent to all board members a few days, at least a day or two before the board meeting. And board members should spend time looking through that board packet, and the board packet should have the financial information in there, like the year-to-date budget, bank statements, CD statements for any of your CDs that your association may have. If you have a reserve account, bank account, the reserve account bank statement, an actual balance sheet for your association showing the assets and liabilities for your association, and a delinquency list of all the people that are delinquent, maybe a attorney status report or management status report on the delinquencies. All of these things should be in your board packet. Board members should spend about 10 to 15 minutes a month before the board meeting looking at the year-to-date budget. Look for any variances on that budget. What I do, I'm on my board right now. I've served as the treasurer. Now I'm fortunately just a director at large. What I would do when I'm the treasurer, and even still now that I'm just a board member at large, is I have two highlighters. I have a pink one and a yellow one, and I highlight the variances on that year-to-date budget. And anything that's over budget gets one color. Anything that's under budget gets another color. And when I'm at the board meeting, I listen to whoever's giving the financial report and ask questions like, hey, why are we so over budget on security? Oh, well, we had to hire some additional monitors, during COVID, and that's why we're over budget. Okay, that's a valid reason. I move on. So, you don't want to belabor things. Most of the time, the treasurer or the manager, when they're giving the financial report, they'll point out the variances and give a short explanation as to why there may be a variance. I also look at the bank statements. I look to see if there's any transfers that don't seem correct. I look to see if there's any overdraft charges. I look to see the account balance. Is that similar to what it was last month? Same thing for the CD statements, same thing for the reserve account bank statements. For the balance sheet, which is just the assets and liabilities sheet, I basically always try to look at the assets, right? Because I want to know how much money our association currently has. I look at the delinquency list, and, if we have some owners that are over 60 days, we should be sending those files to the attorney to put a lien on the property and to pursue the owners. Doing nothing on a delinquent owner for 6 months is a recipe for a disaster. You should be proactive and timely turning over delinquent owners to your management company to lien or to your attorney to take the next legal step to get them to pay. Now, that's just for directors at large. You should be spending about 10 to 15 minutes a month looking at the financials. For the treasurer, you have a little bit higher standard. I think probably 30 minutes or more before each meeting, and then, checking throughout the month as well to see if there's any irregularities in the bank accounts through online banking, asking questions when you're signing checks. If you're signing checks as a board member, which, is a good idea for any amount over a certain dollar amount, make sure you're looking at the backup information, that you're not paying the wrong association's bill. Believe it or not, I've seen that in the practice for 25 years. I've seen that several times where one association is paying another association's electric bill. Crazy, but it happens. So look at the backup before you sign the checks, and then spend about 30 minutes or more a month looking at the financials in the board packet. If your management company or if your board isn't providing all of this information to all board members, they should be. And you should be asking questions. Why isn't this being provided? If you aren't sure how to read a balance sheet, I have a really great resource for you. It's called How to Read an HOA or Condo Association Balance Sheet. For those of you who might be joining us later, this is recorded and you're listening to it later. You can just find it by just Google How to Read an HOA or Condo Association Balance Sheet, and you can find it on activerain.com. So hopefully these are some good tips for all of you. What do you do if you're a homeowner and you're concerned about the finances of your association? You can make a records request. As a homeowner in the association, if you put in writing that you want to see documents for your association, you just put it in writing and say, I'd like to see the copy of the year-to-date budget. I'd like to see bank statements, whatever it is you want to see. You're not going to be able to see the specific names on the delinquency list, but you will be able to see a total delinquency dollar amount. And so, that's a tool that you have in your toolbox that you can ask for information. Now, for any of you homeowners who are listening in today, I want you to know I was once a disgruntled owner in my association. And that's how I got on the board, right? I didn't like how things were going, and I decided to roll up my sleeves and help. If you're one of those owners who wants to find out more about the financials of the association, be nice. Don't go overboard, okay? You don't want to ask for 20 years of bank statements. That is a major hassle for the board and the management company. And if we have to spend all of our time, looking up stuff like that, we don't have time to actually run the association. And so what I would just suggest is just ask for, from time to time, do a check. And ask for a small number of documents. If something seems irregular, then of course you can, you have my permission to go a little bit more overboard and ask for more information. But just recognize that your board's doing the best that they can. And just by seeing the participation of the people here today, I think it was like 74 or 75% of the people here are board members. They want to learn. They want to do a good job. And so cut them a little slack. If they're not doing their job, make sure you forward them this video or give them a copy of our cheat sheets so that they have the resources available to learn how to be a better board member. Okay, let's talk a little bit about reserve studies and reserve accounts, which is our next financial topic today. What is reserve funding? Reserve funding is just a mechanism to provide for the repair, maintenance, and replacement of the association's assets as the community ages. Currently, Arizona law does not require a developer or an association board to create and fund reserves for a planned community or a condo. We have a great cheat sheet on this topic. If you're joining us, after this seminar has been recorded and you want to get a copy of it, you can go to our website at mulcahylawfirm.com, go to our cheat sheets tab and click on our reserve studies and reserve account cheat sheet. So again, Arizona law doesn't require an association's board or a developer to create and fund a reserve. Why? It's just because we're a little bit behind in Arizona. There are other states in the United States that do have this type of requirement. And frankly, after the tower collapse in Miami last month, this is going to be something that's going to be approved in legislatures around the country in the future. Why? Because reserve planning through a reserve study and a reserve fund helps the association to continue to maintain the association in a proper manner. It provides you a plan so that when the useful life of something is up and you need to repair it or replace it, you have the funds available to do it because you've planned it out through a reserve study and you have funded the reserve according to the planned out, strategy in the reserve study. So what is a reserve study specifically? Most associations will hire a professional reserve company to help you with this process. If any of you, want the names of some professional reserve companies, you're welcome to reach out to me. Ask for names. We're in Arizona. We're happy to provide that to you. Typically, how much does a reserve study cost? It really depends. Like I said, it could be anywhere from like $800, $750, $800 to all the way up to $5,000. How often should you have a reserve study done? In some states, it's every 3 years. Like California requires it every 3 years. In Arizona, of course, there's no requirement for that. I think kind of a good rule of thumb would be like every 5 years or every 10 years, depending on what your amenities are and if there have been any changes to the amenities in your association. So what exactly is a reserve study? It's typically like a 30-page document, and it's a budgeting guide that provides a comprehensive plan to show how much is reasonable to place in reserve for a specific replacement or maintenance project in your association. So when it's done right, it gives a clear picture for the maintenance, repair, or replacement requirements of association assets for the life of the association. And really, typically it's done on a 30-year plan. Sometimes it's a 20-year plan, it just depends. And what it does is it takes each component in your association that the association is required to maintain, and it determines a useful life for it, like how many more years until the pool needs to be replastered, how many more years till the roof of the clubhouse needs to be re-roofed, how many more years till painting. It really is like a strategy, a plan for when things need to be done in your association and how you're going to fund it. And a lot of times I'll get a question, well, our reserve study says that we need to have 3 million in it, and we only have 1.8 million. If that's the case, you need to go back to your reserve company and compute how you can get to the number that they feel you need to maintain your association. And how many associations are 100% funded? Not that many, to be perfectly honest with you. Your goal should be somewhere between 75 and 85% funded. And, that I think is a good goal for you. If you're underfunded, like I think I read somewhere, after the condo collapse in Miami, that they were only 8% funded. For a large high-rise condominium like that, that is obviously shows that there were some management issues and that there wasn't any long-term planning done for the maintenance of that association. So really, I think I've given you kind of the 411 on reserves. A reserve fund, just a couple closing points would be very important that the money that goes into the reserve fund is segregated and separate from your operating expense accounts, your income accounts for the association where the general assessment money goes in. It should be a totally separate bank account. There should be higher restrictions on that account because typically that's where associations have almost all their money. The other checking accounts for the association, money comes in, money goes out, and there usually isn't that much money in there at any one time. You're not going to have like millions of dollars in your general checking account because assessment income comes in, it gets paid out right through expense bills, and so there's that account is always in flux. The reserve account usually is where you keep all your money, right? Your big money, millions of dollars sometimes. So you want to make sure that you have that money in an institution that is, FDIC insured. You want to make sure that you aren't over the amount that is FDIC insured for that bank. You might need to spread the account, you might need to spread the money to several different banks so that you make sure that if the bank goes under, that it has FDIC insurance on it. And there should be restrictions. Don't, put that in some sort of high risk investment. This is something that should be in CDs that, may be planned to, be renewed in conjunction with when you plan to have to take money out. So there's no penalties. And it shouldn't just be one person can, remove money from that account. It should be set up so that like a majority of the board would have to approve to move funds out of that account. And the manager shouldn't have direct access to transfer that money electronically. No individual board member should be able to transfer money out of the reserve account electronically either. So I hope these give you some good tips on, reserves and the importance of reserve funding, having a reserve study, and planning for the future of your association. We have a great cheat sheet, as I mentioned a little earlier, reserve funds for community associations. It's more of a deep dive if you're interested in that topic. Okay, one more poll question for you. I'm loving having all of you give me feedback so that I feel like we're talking in a room and I'm addressing your questions as they come up. So the next question is poll question number 5. Given the state of COVID at this time, what is your preferred method of learning? And this is really important feedback for us because I'm going to be meeting with the neighborhood services departments here before the end of the year to do our planning of the curriculum for 2022. So this information is helpful so we can plan classes that are going to be what you want. So the question is, I don't see myself returning to in-person classes this year, but I'll see you virtually. The second answer would be, I would prefer to be back in person starting yesterday, please. And I've had some people email me saying that, and we do have a couple of in-person things coming up. Check out our website if you want to be there. Or I have no preference regarding virtual or in-person learning. So if you wouldn't mind helping us out so I can pass this feedback to our neighborhood services contacts as we're doing our planning for the rest of the year, and also for our planning for 2022, I would appreciate it. Okay, 65% of you are saying that you don't see yourself returning to in-person classes this year, but you want me to continue teaching these classes virtually. 14% want to be back in person starting yesterday, and 20% have no preference or aren't sure about virtual or in-person learning. Okay, so that's great feedback. I promise you that I will be talking with, and I'm sure many of those neighborhood services departments are listening in here today. As we start to plan for the future, we'll keep that in mind. And I think probably what we will continue to do is continue with our virtual classes and maybe try to sprinkle in some in-person classes with a virtual element for those of you who want to go back in person. Okay, let's talk about our last topic. And we are almost right on time, which is awesome because I usually go over a little bit. So we're on track. So this last topic is a scary topic: how to prevent fraud and embezzlement in your HOA and condo community. I have a lot of experience, unfortunately, helping associations navigate what to do when they determine that a board member or a manager or somebody somehow, conducted a fraud on your association and embezzled money. We have a great cheat sheet on this, which is a deep dive as well. We also have it on our website at mulcahylawfirm.com on the cheat sheet tab. And it's called How to Prevent Fraud and Embezzlement in Your HOA or Condo. Unfortunately, I also have some personal experience of, handling embezzlement in an association. When I was, remember how I told you earlier in this call, that I was unhappy with my association that I own a property in, and I ran for the board so that I could try to make positive change. Well, when I got on the board, guess what I discovered? I discovered that our manager had embezzled over $500,000 from our association. And so not only have I worked through this process with associations in Arizona who unfortunately reach out to me as their general counsel attorney, I also discovered that when I wasn't on the board, there had been embezzlement by our manager. So let me tell you, I can give you a lot of advice on this in terms of how to prevent it, warning signs, and what you can do to protect yourself. And I can tell you, I bring an interesting perspective too, because I've been on one side where I'm just the legal counsel and, the board consults with me and I give my advice and then I move on to my next association problem on my desk that day, versus when I was the treasurer of my association and I'm staying up late at night worrying about, oh my gosh, what are we going to do? This is a serious problem. how are we going to recover as an association from this? And I can tell you that that was a ton of stress for me, and a big worry. So what I want to do by sharing this topic with you is tell you that it happens. And you need to be on the lookout for it. And if you Google HOA fraud and embezzlement Arizona, you are going to be shocked at what you find. And so let's talk about what you can do to detect that, hey, maybe there might be a problem. So what is misappropriation, fraud, embezzlement? What does it look like? So someone may be outright taking cash, stealing petty cash, whatever, transferring money electronically from your bank accounts into their personal account, faked expenses, submitting an invoice twice, submitting an invoice for something that isn't even, an actual vendor, non-existent employees or former employees included on the payroll, transferring association funds to another community, the management company, or the manager, or a friend of the manager, use of association funds as collateral on personal loans. Can you believe that? I've seen that. Showing investments on their financial statements as certificates of deposit when they're actually non-existent. So what they're doing is maybe you get a board packet and somebody's telling you, hey, we've got a CD for 300,000 or 275 or 250, but you never see the backup on it. And then when you ask for the backup on it, they can never produce it. A manager paying their personal bills or a board member paying their personal bills with association funds. These are all examples of what misappropriation could look like in an association. So what are some warning signs? Missing bank statements and missing reconciliations. So you're asking for a bank statement from your management company or from the treasurer and no one's giving it to you, or they're doing a summary of it. No, you want to actually see the actual bank statement, and be careful, because make sure that it is the actual bank statement and there hasn't been like some copy over on it or something. Maybe you even need to verify electronically that the what's on that sheet is actually in your accounts. I already talked about assigning control of the reserve fund to the entire board, not one person. Making sure that you're getting your monthly financial report with your board packet. We talked about that when we just talked about that a minute ago. And so spending the time, 10 to 15 minutes if you're a board member, or 30 or more minutes if you're the treasurer, going through that actual board packet with the financial information in it. I get a lot of heat from management companies for saying this, but I'm going to say it anyways. Require 2 signatures, including at least one board member, on all checks or transfers greater than a pre-designated amount. So, what could that pre-designated amount be? Typically, it's like $2,000. For some larger associations, maybe it's $5,000. But actually having the treasurer look through the invoices and sign the check, having two board members, is really just a good financial control and a good way to prevent fraud and theft, embezzlement of association funds. And like I said, I get a lot of heat from managers about that. But my job is to protect the association. And if I think that is one way that we could prevent from having fraud and embezzlement in your association, why wouldn't you do that? Now, I'm not saying you may also want to set it up where, like regular bills, the documentation and the check are provided to the treasurer, after the bill is paid, that's fine. Or maybe you've got things on auto debit, just as long as you're checking to make sure that the check is being paid for the right association and is the right amount. And then maybe any checks over at other designated amount, like 2,000 or 5,000, whatever you say for your association, that will be, something that would require the 2 signatures of the board members, and everything else, maybe the manager could sign, or the designated person at the management company. Okay, reviewing bank statements and reconciliations. We already talked about that, but doing that on a monthly basis. Keeping only a small amount of petty cash on hand and in a secure place. And have a written log for petty cash so you can keep track of it. I'm really wary about credit cards for association board members, association credit cards. There's been a lot of problems on that in the past. So I would prefer that if the board member, has to purchase something, that they submit a receipt and they do reimbursement that way, and that we're not giving board members credit cards. for the association. Regularly look at delinquent receivable balances. Purchase adequate fidelity insurance to cover the volunteers and employees who handle funds of the association. And arrange for D&O insurance, directors and officers insurance, in the event the board is accused of financial mismanagement. Make sure you're having that audit review or compilation every year that we talked about a little earlier here today. And if your association board discovers that funds are missing from your association, remove the suspected perpetrator from the activity immediately. Reach out to your legal counsel immediately. Notify your insurance carrier immediately. Talk to your dream team about advice. You're going to need a lot of it. And I've been through the whole process, from making a claim on the D&O policy for the association, the fidelity bond for the association, contacting the police regarding the inappropriate behavior or mismanagement of the funds by the manager or whoever. I've even had to testify at the restitution hearing, where the manager is going to jail. So I've been through it. It hasn't been fun, I'm not going to lie to you, but I'm a great resource for your association if that ever happens. So know that I'm here for you and that I, want to, help you through this process. Okay, one more thing I want to cover that I think we may have missed with that little blip here that we had with the internet. What are some warning signs that you should know about? So just real quickly, missing bank statements, general ledgers aren't balancing, altered documents, photocopies are given to the board rather than originals when you want to see an original, unexplained cash shortages, unauthorized credits to receivable accounts, past due accounts for the association, which should never be happening. Being overdrawn on your bank account should never be happening as an association. Duplicate payments to vendors, unauthorized purchase transactions, and payments for unspecified services. So all of this will be caught if you're having an audit done, by a CPA specifically, but also just being vigilant as a board member, making sure that you're looking at the financials every month, and then reaching out to your trusted advisors if something doesn't seem right and say, hey, something doesn't feel right. What do you think? Because what I found when I discovered it in my association was I just saw one thing that I was like, that is not right. That doesn't make sense to me. And then I started digging deeper, and that's when I found, all the problems. And, it was scary. So know that we're here, to help you if you ever are in this situation, or if you have questions or you want a second opinion. Hey, this doesn't seem right. What do you think? I'm here to help. The board of directors really does need to have a team of advisors and a management company, or, a good management company with a good reputation. And your team of advisors are going to be your attorney, your insurance agent, your investment consultant, if you have one, your reserve specialist, and then of course your management company. We're your dream team to help you through this. Now, if you think your management company is stealing from you, obviously you want to come to your attorney and make sure that the attorney is going to be independent and be your attorney in this matter, and not, go back and talk to the management company about it. And you have that commitment from me. I represent the association. I don't ever represent the management company. And if a client tells me something, I keep it confidential. And because they are my client, and my job is to support them and help them through any difficulties, legal or otherwise, that they may be having. Okay, so don't forget, we have our tips for preventing theft and fraud of association funds cheat sheet. We've already shared that with you, and you can also find that on our firm's webpage at mulcahylawfirm.com. On the cheat sheet page, just type in preventing theft and fraud of association funds, and you'll find it. Okay, great class today. We covered a lot of financial topics pertaining to associations. And I think this is going to be one of those videos that people are going to share with their boards after this class, because it just contains a lot of great information about financials, budgets, what you should do to protect your association, what are your monthly obligations to make sure that everything is, running properly from a fiscal standpoint in your association. So thanks again for joining us today for our 9th class of our 2021 Virtual HOA Academy. I'm really happy that you were able to join us here today. We had over 100 attendees via Zoom and via Facebook Live. I want to just take the opportunity again to thank the neighborhood services departments from the cities of Avondale, Chandler, Glendale, Goodyear, Mesa, Peoria, Phoenix, Scottsdale, Surprise, and Tempe for their teamwork, commitment, and continued partnership with our firm to put together these amazing virtual classes. We have had 47,000 residents or people throughout Arizona listen to these videos live and in person. And I really feel like we're making a difference providing free education. So I would like to thank those cities for their leadership and helping our firm put together these classes so we can have less problems in associations, better communities working together, following the law, and basically having less hassles as a board member, and maybe owners that are less frustrated about what's going on in their association. I'm going to be teaching a number of other classes. You can find all of those classes on our website at mulcahylawfirm.com. Just click on our seminars tab. And we hope you'll join us because we have a number of classes planned for the rest of 2021. One class per month with the Neighborhood Services Virtual HOA Academy. We're going to be doing, it's always the third Tuesday of the month in October, November, and December. And we have a sprinkling of other classes, including our First Fridays, which is the first Friday of every month between 9 a.m. and 10 a.m., where I go live and answer questions from anyone who has questions regarding HOA or condo law. So hope you'll be joining us at one of these upcoming classes. Thank you so much for being here today. Thank you for caring about your communities. And it's just my pleasure to be able to know and teach these classes with all of you. So have a great rest of the week. Hope to see you at a future class in 2021. Take care.